Will an algorithm eventually replace your entire real estate brokerage accounting team? As artificial intelligence deploys across the financial sector at an accelerating rate, this specific question is keeping brokerage owners, CFOs, and finance managers awake at night. The anxiety is palpable, and on the surface, it seems justified. This panic stems from a specific misunderstanding: the assumption that a machine's ability to process vast amounts of raw data is the same thing as the ability to manage complex financial strategy. Real estate accounting operates under a unique set of pressures. Navigating the future of brokerage finance requires building a system of human-AI synergy, not chasing full automation. The industry currently views technology through a flawed zero-sum binary: humans versus AI. Positioning an algorithm as a direct competitor to a human accountant misinterprets what the technology is actually built to do. Capacity multiplication offers a more accurate framework. In this model, AI functions as a computational coprocessor, handling the heavy lifting of raw data while the human professional retains authority over the logic. High-performing brokerages are already adopting this coprocessor mindset. They are leveraging algorithms to scale their daily transaction volume and expand their operations without having to aggressively scale their internal headcount. Attempting to fully automate your financial operations without a human in the loop increases your risk profile. A functional, secure brokerage requires a human-in-the-loop architecture to remain compliant. To see why standard automation fails in this industry, we have to look at how a brokerage moves money. While standard corporate finance is often linear, real estate finance is highly fragmented. The moment a deal closes, multi-tiered commissions, caps, and split rules create operational friction. Then, trust accounting constraints layer in, demanding rigid compliance. Combine this with daily ledger reconciliation, and human processing speed reaches its physical limit. These structural complexities mean that continuous human oversight is a legal mandate. You cannot untether the machine and let it run the brokerage. However, there is a specific territory where the technology is undeniably superior. This is the domain of the algorithm. AI excels at deterministic operations, tasks governed by clear rules, exact pattern matching, and massive raw data throughput. Through optical character recognition, it instantly converts complex invoices into structured data. It cross-references incoming transactions against the brokerage ledger, confirming exact matches in milliseconds. Machine learning models continuously scan this flow, isolating errors before they impact the general ledger. Through tight workflow automation, the system collapses the historical lag between a deal closing and the financial logging of that transaction. Routing deterministic tasks to the algorithm largely bypasses the manual data processing bottlenecks that historically paralyze accounting teams at month-end. But data throughput has a hard ceiling. Eventually, the algorithm hits an architectural wall, the hard boundary. Consider a high-stakes scenario: a complex commission dispute involving a vague agent contract and a minor discrepancy within a trust account. In this scenario, AI fails. The algorithm only sees raw probabilities, lacking contextual understanding of the firm's history or interpersonal relationships. Furthermore, a machine possesses no legal agency. It cannot interpret regulatory gray areas or defend a trust action during a state audit. Resolving disputes and navigating contract ambiguity absolutely requires human judgment and tact. It is also the human professional who analyzes the data to make strategic financial decisions regarding where the brokerage should invest its capital next. And critically, it is the accounting manager who sits down with the broker owner to provide proactive financial guidance and manage essential banking relationships. High-stakes probabilistic functions are strictly a human domain. Crossing this boundary by trusting an algorithm to negotiate reality leads to systemic failure. This boundary highlights the most severe strategic mistake brokerages are currently making with technology adoption. Viewing AI primarily as a mechanism to reduce headcount in the finance department is a miscalculation of risk. Removing oversight from trust accounting invites immediate compliance violations, triggers failed audits, and severe financial penalties. Automating the financial interactions between the brokerage and its agents strips away the personal support system. This breaks agent trust and damages the internal culture of the firm. The highest-performing brokerages take a different approach. They view AI as an efficiency tool deployed to elevate the capabilities of their existing staff. Augmenting human expertise with AI scales the capability of the entire system. When executed correctly, the outcome is a high-performing brokerage operating at maximum speed with minimal reconciliation errors. This is the synergy architecture. The system acts as a filter, automatically processing the high-volume data streams while escalating only the critical anomalies to distinct human approval checkpoints. The accounting team moves past the manual entry of invoices, shifting their daily attention to the oversight of the automated pipeline. This operational freedom gives the finance team the bandwidth to focus on high-value analysis, rigorous financial oversight, and driving brokerage growth. The modern accounting office generates the financial intelligence required to secure the brokerage's future. The long-term viability of the brokerage depends on the integration of human judgment and algorithmic precision. Brokerages that fail to adopt this synergistic workflow will be unable to compete with the speed, accuracy, and operational margins of those who do. Given the strict compliance and complexity of your operations, would you trust an algorithm to fully manage your brokerage accounting without a human in the loop?